Did you know you can finance your child's lifestyle using life insurance that you put on them? By the end of this video, we are going to share with you all of those details. My name is Carmen.
And I'm Darius. And when you think of life insurance for your children, I mean, you think about the fact that when they're first born, Gerber sends you a letter or they ask you, do you want insurance on your child? And of course you say yes, because it's so cheap. Yeah. Well, the thing is, even when you have independent insurance, it's also super cheap because this is a child. This is a baby. Mm-hmm. So what we've done is we bought insurance on both of our children because of how inexpensive it is. Life insurance purchased on a child is the cheapest life insurance that they will ever have the opportunity to buy in their entire lifestyle. So I felt like it was our responsibility to make sure that she's able to participate, or both of our girls are able to participate in this opportunity, because in our 30s, we kind of missed the boat by about 30 years.
Yeah, exactly, because there wasn't insurance on us, right, as children. So let's take a step back, because we want to talk about it again from a personal standpoint, right? Mm-hmm. So we have two daughters. We have a 3-year-old, and we have our daughter, Isabel, who passed when she was 9 months. So we had life insurance on both of them, and little did we know how this life insurance journey was going to transpire in our lives when our daughter passed. Mm-hmm. So we had term life insurance on Isabel, our 9-month-old, because she had a terminal illness and that was all we could get. So we wanted to make sure that we had life insurance on her because we just didn't know what finances were going to be like, because she was in and out of the hospital her entire life. Mm-hmm. So for us, the amazing thing that life insurance allowed us to do was to have this death benefit to cover financial expenses should we needed it. Granted, we didn't need the funds when the death benefit came, but it allowed us to, be more diligent in thinking about like our family trust, our family legacy. What is this going to transpire because we now have this money in place? Mm-hmm. And so I think that opened our eyes to think about life insurance from a completely different standpoint because of the infusion of cash that came through when our daughter passed.
Now, on our oldest daughter, she's now 3 years old. We also purchased life insurance on her when she was a baby. Now, the life insurance we were able to purchase on her, we got her a whole life insurance policy because we know there's a difference between the cost in term and whole life. And what we were thinking about is her when she's our age. What type of access to cash will she have when she's our age if we start that now on her behalf? Mm-hmm. Because we didn't have it. Mm-hmm. So what we really wanted to do is we want to be able to not only position ourselves, but also position the next generation, not just with knowledge, but actual funds that they can utilize up to that point. And we're able to teach them exactly how to use it. Mm-hmm. So with our daughter right now, she's 3. She's had her policy for a little over 2 years. She just turned 3, but she's going to be going to preschool soon. And preschool has an expense. Now, what we did when we were going to look at different preschools, we asked them how much it would cost or how much could we save if we paid for preschool up for the year. Well, there's a discount there. And that discount we're going to put into her policy as we make those payments back after or throughout the year. Mm-hmm. We're able to grow her system for her on her behalf until she's ready to take the reins on her own when she's much older.
Yeah. And like Darius said, how we're going to apply that discount is we're going to act as if there's no discount when we make those repayments back to ourselves, right? Mm-hmm. So a lot of times people look at the discount and go, oh, I get a discount. But for us, we just look at it as opportunity to fund our systems more aggressively. So for perspective, right, we'll put like a sample illustration on the screen so you can see what it looks like if you were to insure a baby. And you can just see how the cash value growth can intensify every single year as they continue to get older. Mm-hmm. So if we look on the screen, you can see like our daughter in this example, we're going to look under the non-guaranteed values under the surrender value column. And the reason why I'm jumping over to there is because this is the cash value as proposed if a dividend was added to the cash value. And with this particular company that we are showing you, they have been paying dividends for over 100 years. So we assume that a dividend consecutively. So we assume that a dividend would be applied in the future, but it is not guaranteed, right? So we got to make sure we understand that. So in this case, the premium is $3,971, and you can see 3 years in the cash value under total surrender value, there's $6,073 available. And in this case, like we said, we could use this money to pay for preschool. We could use this money to pay for toys, for whatever the case may be. Diapers, you get the gist. So the idea is getting your ducks in a row when your children are younger, because typically parents are going to save money anyways. You're going to save money in a nest egg, right? Or excuse me, in a savings account, in a CD, or you'll be taking that same amount of money every single year and putting it into an investment. So for us, we choose to take our money and put it inside a whole life insurance policy because we know that the growth is guaranteed. It's going to compound. And as long as we do our due diligence and get a loan, pay all the money back plus interest, this thing is going to grow exponentially. So,
no, and just to be honest, the money that we're using to pay for our daughter's, life insurance is money that is additional interest that we earn from our policies that we used on ourselves. So it's we're not coming up with additional money. It's money that we're already making that we need to find a reason for doing, a purpose for it. And the purpose for us is to put it into a life insurance policy. Now, the expenses for our daughter is significantly more than the $6,000 that's in it, but we have a specific need that we want to apply this cash value for. And that specific need also allows us to have a discount that we can realize in paying this policy loan back. So there's a system that we have in place already for not just us, but for our entire family in our banking system that we've created. Now, as she gets older, we're going to be able to use the system that we've created for more things. But the key here is understanding that the more we use it, the more cash is available, because just looking at it, it's just a vanilla illustration on a piece of paper. We get to control the how fast and how much this grows by using it.
Yeah, absolutely. Because that's a good point, because a lot of times people just get stuck on the numbers that you see on the screen and they think, oh man, that's not a lot, or maybe it is a lot. I don't know, depending on, where you are in your financial journey. But again, like Darius said, is the more you use it, the more it grows, especially when you're paying yourself the interest back into the system and how this all works. And if you have questions on that, then definitely click on the video above, because we talk about all of the nuances on how to make your policies grow.
Are you looking for a life insurance policy specifically designed to help you accomplish your financial goals?
And if you have a policy, or if you're looking for more education, would you like to be a part of a community with like-minded individuals who are all using life insurance to accomplish their financial goals? If so, click on the link below. We would love for you to join the Wealth Nation Money School. So if we jump ahead really quickly, you can see like example and we're just talking about education for our daughter. You may have other expenses for your children, but at the age of 5, she would have $10,639 available for private school. Maybe if we were thinking about private school, and we can even jump to the age of 17. At the age of 17, maybe she might be driving. We have $60,000 available, $61,710 to be exact, of funds that could be available for our daughter to buy a car, right? And pay for college should she need it.
Yeah, we definitely know in the next 18 years, 17 years, college tuition is going to be more expensive. But why not reduce it by the amount that she has available and pay that down? Because even if you borrow money to pay for college, you still have to pay that money back. I don't know what is going to happen as far as politics and debt forgiveness and all that stuff. We're not going to go there. But assuming that things are the way they are now, we're still going to have to pay that money back. So why not pay it back in a system that we own versus a traditional banking system?
Absolutely. Now, we'll put the numbers up on the screen and we'll scroll so that you can see the growth of the policy year after year with just depositing, $4,000 a year into this policy. And you'll see that the amount of the premium changes when the child is 11 years old. It goes down to $1,966. So just with, let's call it $2,000 every single month that you're saving for your child, you can see how this will have a significant impact on the growth of the cash value. Again, if you're looking in the total surrender value year after year. Now let's jump to the age of 30. Let's say our daughter decides that she wants to buy her first house, or she wants to do other investments, whatever the case may be. She has over $140,000 available that she can use at her disposal because this is her policy. She's going to be paying for this thing at this point, right? Or, well before 30 years old.
Exactly. Or suppose when she's 40 and she wants to get married, there's plenty of money there.
Absolutely. And again, this is just one policy, right? We don't aspire to just have one policy on our daughter or on us individually. The idea is you start with one, you build it, you grow so that you can buy more. So this is just one policy, again, on a sample age of just being 3 years old. Mm-hmm. And then let's jump to, hopefully our daughter lives a long, healthy, prosperous life. Say, for example, she has children, and if she were to pass at 85, she is able to provide our grandchildren with $2.3 million in death benefit on this one policy that we just funded for $4,000 a year. Right? It's just perspective on how you can utilize your money to multiply and work for you in different ways, as opposed to giving up control. And we recognize the power of life insurance and what it can do, especially not for children, not only us, if you get started early. So like Darius said earlier, we started 30 years behind, but knowing this information, we're like, nope, our baby's going to get started early. And you can get policies on your children, at 6 months? Mm-hmm. It's roughly around 6 months. So you best believe, that they're going to be blessed at 6 months with a policy in the Britt household.
Yeah, you can actually get policies after they're like a week old.
Yeah, exactly. Yeah.
Mm-hmm.
So at the end of the day, kids are very expensive.
And what we...
That's the nutshell of this video.
Oh, there's different
Get a
things.
policy so you can afford your children.
So you can make money from the things that they're going to do anyway, because that's the whole point. Because again, a lot of times that what we stress is every time money comes out of your pocket, that's for the profit of the person that you're giving the money to specifically. So anytime money's coming out of our pocket, what we want to do is be using somebody else's money or the insurance company's money so that we can take that money and pay ourselves the interest we would have paid otherwise. Because what we've learned is cash is king, because a lot of people don't understand the power in which it holds whenever you pay for something up front. Mm-hmm. That's what it does. It gives you access to hidden discounts that you wouldn't normally have paying month to month. Absolutely. And we want to realize those benefits with our daughter as she gets older, so we can also teach her real life experiences, what we're doing with our funds, even starting with how she pays for preschool.
Absolutely. And what Darius was saying, I want to just go back to the screen real quick to again show you all the beauty of compound interest and having access to capital. So if we look at the age of the policy, meaning 12 years into the policy, you can see that our daughter would have access to $39,380, but the premium is $1,966.
So that's a difference of, let's say, about 3,000 and some change, but we paid less than 2,000.
Yeah, and we're looking at the difference between year 12 and 13, just that difference. If you take 43,000 minus 39,000, again, we're saying that's roughly $3,000, but it only cost us $1,966 for this premium. So you can see every single year we pay the premium and it's growing more than what it cost us.
Right.
So that's the beauty again of this policy and how this works. And you can see every single year that growth is more and more because of the beauty of the compound interest.
Right.
And again, this isn't even talking about how we're using the policy. This is a sample illustration of what it could look like if you're only paying the premium.
So at the end of the day, everybody in your household should have life insurance, because you don't know at what age when you're going to have to utilize the death benefit of those policies. But more importantly, because we know everybody is going to live a long and prosperous life, we want to make sure that we're able to finance those things in between time, because that's where life insurance should be used, is in between times. At the end of the day, everybody in your household should have life insurance, because you never know what curveballs life is going to throw you, and you want to be prepared for those unexpected experiences that you could have. We were never expecting that we were going to bury our 9-month-old, but that was one of the things that happened to us, and one of the things that you can benefit from our experience.
Mm-hmm, absolutely. And again, as life insurance agents, having this experiences that we've had have allowed us to really transform this product and to use it even more strategically than we thought we could, just because of the experiences that we've had. So that's why we wanted to create this video for you today, to show you the importance of insuring your children, because like Darius said, you just never know what's going to happen. And should your children live long and prosperous lives, at least you've set yourself up where you can finance any expense that comes your way, because we know children can be expensive.
The children are expensive.
All right, so go ahead and check out our next video so you can understand the nuances and how this process works. And don't forget to own your own lifestyle.
Or someone else will.